Just sharing my screens right now. Okay, so can you see my screen? So what we are going to go over is the change in the state of delivery. So when you're thinking about changing the state of delivery, right, you should be thinking of a reversal, right? Or you should be thinking of a retracement, right? So if we have change in the state of delivery, we're doing one of two things, right? We're gonna go from a buy side curve to a sell side curve, right? That's your reversal. Or we're gonna retrace, and when we retrace, it's on a higher time frame, right? Let's say this is the 1 hour, right? But on the 1 minute, we're creating all these different higher highs and higher lows, and then we change our state of delivery, right? We change our order flow, and then we start going down. It's a reversal intraday, right? But if we zoom out and we look at the higher time frame, it's just a retracement, right? We're going from here to here, but the market doesn't go straight up, right? Unless it has earnings like today, that fucking shit went straight up. But the market doesn't go straight up; it has to breathe, right? Some people call it breathing, some people call it retracing, creating different things. But what we want to capitalize on is we want to capitalize on identifying the change in state in certain areas, right? Change in state as a reversal, right? Low, high, change in the state as a retracement on a higher time frame. If we look at our chart, right, and we'll go to the 5 minute just so it's a little bit easier to spot. If we zoom out, hindsight, we can see market structure, right? We can see all of our leg down, leg up, leg down, right? And then we can see where we reversed, right? So all of these little areas would be what? These would all be the change in the state of delivery. It's the highest point and the lowest point, right? Before we reverse. Highest point, lowest point, highest point, right? And it just goes on forever. And never, 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 never. And if we go to the 1 hour, you can see like it just goes on forever, right? Again, change in state, change in state, change in state, right? They're everywhere. So how do we find when the market is going to create a change in the state of delivery that's going to be accurate to a reversal or a retracement, right? It falls under the trade continuum, we'll call it, of the PD array that I showed you guys, right? If you remember from the when we were talking shop, I think I ended up like not sharing my screen or something like that. But if you remember, like my screen went out. If you remember, I explained that the trades that we take, right, should all be within this area. This is our trade continuum, right? This is where we should be taking a trade. Right now, what we're learning is we're learning how to spot the manipulation that takes us from a premium to a discount. We're learning to spot the manipulation in the discount that takes us to a premium, right? We're getting rid of this area here so that way we can catch what? The reversals, right? We can catch the change in state in these certain areas. So if we look at our trade continuum, it happens, the strongest ones happen on your old high or your old low, right? If this is our daily PD array, right? This is our daily range. This is the yesterday's high and yesterday's low. And this is what we are trading in, right? Let's get rid of all of this. This is the dealing range that we're trading in. We created the high and then we created the low, right? And then we closed. When we're looking at changing the state of delivery, we're looking to buy under a old low and sell above an old high. The same thing goes for, let's reset our chart, your sessions. Remember I explained the different shelves. The same thing goes for your sessions, excuse me. Your sessions is where you're going to find your change in the state of delivery. You're going to find your sessions outside, and you have to remember this, you're going to find them outside of Asia. Outside of your Asian range is going to be your best bet change in the state of delivery. If we look at today, right? Again, this is just hindsight. If we look at today, and this is the 1 hour, we have our daily, this is our daily array, right? Our daily dealing range. If we map it out, we can see how the market respected it. We dropped underneath the daily range during Asia, right? But remember what I just said. We want to find our change in state outside of Asia, right? Outside of it. So with this being our daily high and this being our daily low, we now have our Asia that was mapped out here. And we want to see our change in the state above or below Asia. This is the best change in state when you're trading a weekly profile, right? If you look at the weekly profile is like Monday high, Tuesday low, Wednesday reversal, whatever, right? Whatever weekly profile, weekly range that you're reading. But if you are trading according to the profile, right, it's gonna all be the same exact way. It's gonna start the same way. It all starts off with Asia. Asia is very important to the day. There's a reason why we want Asia to go play out first to give us our range so we can see what London does with that range and we can see how New York reacts to Asia and London. If you guys remember when I was talking shop, what I explained was London respects Asia and then New York respects London. So if we look at what happened with Asia and London, right? And we'll go back to the daily array example right now. If we look at how we respected London respected Asia, right? Asia, where did we manipulate? Underneath Asia and above Asia, old low, old high, right? This is our dealing range. This is where the algo is dealing until MNO comes out. Then when MNO comes out, right, New York Open, then we decide to break under and go back up. And we can see that manipulation now, but when it's happening, it's again a little bit harder to catch. But if you identify your change in state where underneath, right, and above, what we're looking for London to do is we're looking for London to also take out a old high, older high or older low. Our drawn liquidities should be our older PD arrays, right? Our older dealing ranges. When we break out of a range, we respect a new range, the new range or the old range that was formed, right? The new range that this candlestick is going to be governed by is going to be the old range. And what's the old range? The old range is New York, right? So if we go back, we can see London and New York did what? We broke these old lows. So what are we supposed to do? Supposed to buy under an old low, right? Here's three old lows right here. Old New York, old London, old Asia. And if we map them out according, we can see exactly how they played out according to identifying your change in state outside of the range. All right, let me just get rid of this stuff real quick. So to answer your question, Dan, right? Your high probability change of state is going to be outside of the Asia range. That's how you're going to be able to identify and catch this fucking crazy explosive move. Now the day ended here. This is earnings. So this is not likely to happen, right? We will sometimes get an explosive move like this. But this was after the market close. This big up and down candle was after market close. This big down candle was after market close, right? Oh, sorry, this was equities. This was after market close. Then we had another earnings was the last 2 days made the market go fucking crazy. So this was earnings, right? This was equities open. This was earnings right here. So if we go back, and we go back to our smaller time frame, right? And like I explained to you guys, I like the 1 minute. The 1 minute is something that I like to look at, that I like to trade on. Remember the first fair value gap video that I did where I explained where to buy and where to sell and how we respect, right? We identify a old low or old high that we're supposed to buy underneath. And when we break that level, that's when we look for the change in state of delivery. We don't look for the change in the state of delivery up here because there's what? There's no PD array. There's no old high or old low. We look for the old low to be purged. If we look here, this is a perfect example. This is your old New York, your old London, and then your old Asia, right? If we look at the framework that I posted for you guys, right? The one that I said that we should always be looking at, we literally did exactly that. We dropped, broke below, and then we shifted the market, right? And we never broke below this. This is our long-term low. We never broke below it. But where did we break, right? Old lows. Now, here comes the change in state of delivery part. Again, mapping a standard deviation, right? That's different. But when we're doing change in the state of delivery, what we're looking for is we're looking to identify the manipulation candle, and then we are also looking to see where it gets respected to go up. This is a part that people are going to trip out on. You don't need to identify it right away. I don't know right now that this is the end, right? And the reason why I don't know this is the end is because we could totally fail to break this high and go lower. You can wait, right? This is the beauty of the change in state of delivery. You can wait for more candles to play out to see that we have what? We have broken away and broke the high. We broke away from that low, which leaves this low what? Protected. The reason why this low is protected is because it's below old lows. So when we, let me get rid of this real quick. So when we look at the change in the state of delivery happening, we want to see the low, right? Sell side. We want to see the low get purged, right? This is a purge on a lower time frame. All right, on a higher time frame, it's a wick. Lower time frame, it's a purge. Purge is basically the price goes underneath the old high or low, and it just stays there for a while until it does what? It manipulates, and then it goes up, right? That's your turtle soup. That's your accumulation, manipulation, distribution, right? That's your market maker buy model. That's all three in one. And it's also the beginning of what? The beginning of that framework that I showed, where we drop and we never break the low and we go higher. Now, as price continues, right? As price continues, we can see that we break away and we never break below that protected low. Let me remove the drawings and the indicators so I can show you how we should have mapped this out, right? As we create these lows and these highs, we want to wait for the lows to be taken out. And then this high becomes your important protected high. This is your protected high here. Why? Because we are continuing to break the low. We broke this low, right? And then we created this low. Wow, we never broke this high up here. So what's our next high, right? Protected high here, right? And as we drop lower and we create this more south side liquidity, right? We're moving our highs. We're not breaking our highs, right? So then we drop and we create this one, and then we create this high. When your high gets broken and the market shifts, it's easy to identify if you trail it like this, right? Your high, your high, your high, your high. Sorry, your low, your low, your low, your low, because we're always trading within this range, right? Because remember, liquidity or the market moves from internal liquidity to external. So right now, the external liquidity is what? It's all of these highs that we previously had mapped out, right? And this one being the highest one. So this one is your external. And then all of these little ones that we created, right? These are all your internals. And then when we break, this becomes your external. And then all of these are your internal. All of your highs are internal highs until you break away and you fail to break those highs. Then your highest point becomes your external, and then this is all your internal liquidity. So the market is trying to seek what? External to internal. So we went for external liquidity. We created this one, we dropped, and then now we're going to seek what? We're going to seek internal liquidity. So now we know that we have our external high and low, and then we have our internal highs. We don't care about the lows, we care about the highs, because as we're traversing up, we want to break all of the old highs. And this is where you look for your change in state of delivery. You look for them at your internal highs. You don't look for them intraday. You could be waiting all day for London to break, right? We could be trading in a range and we never break out of London. So it'll be hard to find a change of state of delivery inside of London. But once Asia creates that change in state of delivery, then you use the range for internal external liquidity, and then you map out your change in state of delivery. Now, when we are dropping and then we break that internal high, this break creates a what? A market structure shift, right? Everybody maps out their market structure shift differently. There's a lot of different ways to map it out. Me personally, I never got too far into market structure shifts, but I do know that it happens when a low or a high is taken. So for me, this is my market structure shift. The body of this candle, and when we broke the body, not the wick, when we broke the body and we closed above the body, that's letting me know that the market structure is shifted. The other thing that let me know is what? This is your intermediate low, your long-term low, and your intermediate low. This has now formed what I like to see, right? My framework. So now we can look at one, identifying the change in state. Now that we've identified the low got taken, our framework, our internal external liquidity, right? It's a lot more to it than you think. And then we can now identify the candle that we want to close above to create the change in state of delivery. Now, again, everyone thinks that when we do a change of state of delivery, it's a perfect wick touch and breaks out. Well, the change in the state of delivery just has to never break this protected stop. If we break this low, then this does not turn into a long-term low. This turns into an intermediate until we finally break the high and continue higher. So going back, right, now we can identify our change in the state of delivery. The easiest way to do it, and this is going to sound fucking crazy, the easiest way to do it is to grab the lowest body that does not break this, the body, right, the lowest body, and go left. And when you do this, you can see how the market reacts to this specific level here of the lowest body to the right of your long-term low, right? Intermediate, long-term, intermediate. Now that we go left from the body, we can see how price future respects that area. We never came back to it. And even when we did come back to it, we never broke below this specific area. Why? Because this is the unique identifier, the little body, not the way the body looks, not the candle structure, the fact that once we closed above this specific level, this level here, once we closed above this level, it never came back to close underneath it. And this is where you want to get in. Now, if we map out, remember, this is how we map out our standard deviation. We go from the low to the change in state, right? And we can see now how the 0.5 gets respected. Look at this. And if you paying attention, you guys seen I mapped it backwards. I identified the change in state of delivery after the fact. And that's why I explained to you guys, when you identify your change in state of delivery, you get in off of what? You get in off of the retest. You get in off the retest of the change in state on the test of the low risk buy sell. Because as all of this is playing out, we are identifying our projected range. We are identifying our change in the state of delivery. We have identified our old low, right? This is our change in state. We've identified our old low. We've identified 0.5 or this change in state. And then by the time we've identified everything and we've drawn our chart to make it look pretty, we're up here, right? We're coming back down. We can see here that it is respecting our 0.5, which is what? The last chance to get into the price leg when it's in a discounted range. So when you guys see my change in state, and you guys are like, why did you map it out on that candle and not this one? Why did you use this high instead of this low? Why did you use this low instead of this high, right? Why did you use that? Because when we map out the rejection of breaking this low, I grab my body, and this is the crazy part, usually takes you to your left, right where a candle is it closes above, and then it has a hard time going back beneath it, right? If we look at some of the photos that I've posted for change in state, you can see, if you reverse engineer it, right, you can see, just go here. All right, let me see. I'm just trying to find one that has a change in state. That's not from today. This is the one from today. Here we go. So if we look here, right, this body, the way that I mapped this change in state of delivery out was the way ICT does it. The way ICT does it is your manipulation to the open of the opposing colored candle. Now, when we dropped, right, this is the, I believe this is the 5 or the 15-minute time frame. But if you look, when we dropped down here, when we came back up and we closed, our candle closed above the opening of this, how ICT says, right, change in state, low risk buy sell. When we closed above this, we did not return beneath it. Even though we came up to 2.5 and we dropped back down, where did we drop down to? Look at this specific candle. We returned right back to where? To the point that the change in the state of delivery occurs. The change in the state of delivery was predetermined here. After the algo decided it was going to change the state of delivery, it gave this tell. Then it gave you this, which is what we identify as the manipulation. And what are we trying to get better at? Identifying the manipulation. Why? So that we can get in on the reversal. The continuation trade, right? This would be a continuation entry, is easier and safer to get in because we can identify that this point of origin, right, is not getting closed underneath. So if we would have taken this exactly like I showed you, right, we would have mapped it out according to ICT. Not the way that I just showed you going backwards, but the ICT way. We can see that as we were identifying what? As we were identifying why did it go smaller? As we are identifying our change in the state of delivery, right? Sorry, it's really small. As we are identifying it, and all of this price action happens. Remember, this is I think it's the 5 minutes. It's 5 minutes, so this is like an hour. An hour went by. We could have had our analysis done in an hour, and then what? We could have just waited and waited and waited for it to return back to the change in state. And when it did, we could have had our limit order with our stop loss. It would have been a really wide stop, right? We probably would have cut it in half, but it would have been a really wide stop. But we could have had our stop loss underneath what? Our manipulation or our protected low. And then we could have taken it all the way up to, I think it was like 150 handles or something like that. That trade went. Right? The change in the state was, sorry, here. And we took it to here. Right? So our change in state would have been here all the way up here. Well, our target would have been the 4, right? Our 4 was the target. So that would have been 200 bars. Sorry, 201 bars, 102 handles. But when I mapped it out on the 5, right? Because I mapped it on the 5 minute, it gave us a little bit more. This is just an example. It gave us a little bit more deviations, right? It made our deviations higher. So the higher the time frame, the higher the deviations are going to go, right? If we map on the 1 hour, the 1 day, whatever, right? You're going to get a higher projection of price. But like I showed you, the change in the state of delivery is easy to identify, and this is the part that will trip you out after the fact. After we manipulate and we find out what's going on, then will you be able to identify that the change in state is correct. Right? Here's our change in state. Where did I map it? Right? I mapped it from the big giant wick to where? Because this is where we manipulated. We never made it back, which we would have what? Not taken the trade. We would have waited for a different change in state. But as this happened, where did we hit? Where did we get close to that 4, right? That SMR down here. This is where your SMR occurs. So what are we going to do at SMR? We're going to look for an old low, right? We go back. Sorry, I gotta go to the 1 hour because it's actually like really far away. We go back to find out that this is actually an old low here. And this is where we're most likely to what? To have our smart money reversal. And then we identify, this is a little area we're in, and then we identify it, right? We identify the drop back down and failure to take the third low, because remember, New York was down here, London was down here, and then Asia was the third low. We failed to take the third low, right? We took 2 lows. Then we identify what I showed you. We identify where the candle failed. And then this is our standard deviation, and then it gives us our price projections. And what happened at our 4, right? We didn't have a smart money reversal. What did we do? We had a retracement, right? Because remember, a smart money reversal would have been what? It would have been this, where we would have broke this low. But what we had was the retracement, was the retracement, and where we could have gotten in off of the 0.5 with our stop loss at the 1. Again, this is a lot of handles for a stop loss, but it's a protected stop loss, right? It's 43. That's a lot of handles, but it's a protected stop loss. And price is not going to go back down here because this specific area is where we created a brand new order block. And this specific area is where we tested that order block and went the opposite way. So if we look at other examples, right, we'll go back to the 1 hour. And we'll put our indicator back on. Okay. got in. Did you guys see everything? Uh-oh, what'd I do? Yesterday morning in the daily fair value gap. Here, this fair value gap here. Not the one you're talking about? Yesterday morning in the daily fair value gap. This one? I think you're talking about this candle here. Because this is yesterday. And then the day before. Thursday high. Yeah, this is. Oh, yeah, there you go. Look. Here's Thursday high, right? When we came up into Thursday's high, what do? We broke an old high where we do what? Where we're supposed to look for the change in the state of delivery, right? So here's the high, right? This is where Asia is, right? Look at Asia. Again, like I mentioned, right? Asia is the deciding factor on if we're going to accumulate, manipulate, where we're going to accumulate, where we're going to manipulate, and where we're going to distribute. If you guys have been following all the crazy people on Twitter, they've been talking about a double purge, right? So we manipulated here, and then we manipulated here. But where did we manipulate? Outside of the Asia range. And this is where, right here, where we would have looked for our change in the state of delivery, right? We had this big drop where we came back up, and we failed to what? We failed to take out the high that was created. So where would we have marked our change in the state of delivery, right? Again, according to ICT, it's the opposing candle color open. So if we do it ICT's way, it's from up here to the opposing candle, right? So these are all up closes, and then we have our one down close, right? Our one down close is here. Look at how we respect that down close candle. Now, if we go exactly what I showed earlier and we grab the body, right, this up close candle right here, this is the body, and we go out to the left, right, we can see it's literally like one handle away from where ICT would put it or where I would put it. Again, my way would be the same thing, the opposing candle color, right? I wouldn't map it on any of these. I would map it on here. How close is it now, right? This is where I'm just trying to get them all lined up so I can show you the precision, right? And this is where a lot of people will say to map out their standard deviation is where? On this specific wick, right? You go high to low, right, on the wicks. So if you erase this and we erase this, you have ICT's change in state of delivery, which is the one that I would have respected. This one is the candle body that rejected what? The high, right? In this case, it's the high because the high is what got rejected. Then on this one, you have what? You have, I think it's Dexter and others, right? Standard deviation, price projections, right? If we use our standard deviation now and we map it to where? To ICT, we can see how price respected that change in state. If we do it to where the candle body that rejected the high is, we can see how it respected that change in the state. If we map it out one more time to that low, we can see again, right, how it identified and how it purged, but it still was a protected high. But the one thing of all of this remains the same. How did we identify this was going to be the change in state? It broke Asia. Same here. Even with this little tiny break, it's the same thing. It broke Asia. right? We'll do this one next, the same way we did this. We'll do this one next. So if we come back here, I just wanted to show the precision one more time. If we come back here and we have one here, right? And then we have our other price projection to our second leg. And then we have our third price projection, right? Our third standard deviation to Dexter and all the people in Twitter, right? So this one is ICT. This one is the candle body, right? ICT, candle body, Dexter, right? Sorry, the highs are not actually the same. But if we look at how price respected all of it on the way down, the price projection is different by quite a few handles, right? But you can see how they all get respected in the same area. This right here is your 2.5 SMR for what? For the first ICT related one. And we can see how we rejected the 2.5. Now, if we use the candle body, right? The candle body, we can see how we dropped into 2. Here's a 2 right here. This is the 2, right? We can see how we dropped into the 2 and rejected and came back up and retested. Now, if we use the Dexter and the Twitter one, we can see how we came down to the 2, right? Here's the 2 right here. And we rejected. This 2, right? The ICT way, this 2, we passed it. We passed this 2. Now, if you look at this one, if you're going precision, this is the one you want to identify and follow because what? Because it respected the 2 perfectly. So there's 3 different ways you can do it. There's probably like other ways. Some people might say, oh, it should have been to this swing low, right? There's different ways, but just the 3 ways that I showed you, they were identified after the fact, right? After we identified that change in state. But the one thing remains the same. We knew that the delivery, right, the institutional order flow was going to get changed above Asia high. And we could have identified and attempted, right, if there are different short models, to get into a short anywhere in here. Now, here's a crazy one. If you go to the higher time frame, this is the 1 minute. If you go to the higher time frame, right, I like to use the 1 to 5, the 15, and the 1 hour, right? We'll go to the 5 minute now. Now, again, if we map it out according to price rejecting, right, price rejecting here, this is the body of the rejection, right? This is the ICT way, which is literally what? Like one handle difference, right? And then this is the swing high, the swing low. Here's your swing low. Now this is just on a higher time frame, which means what? Which means our projections are going to be higher. We would have been able to identify this move. So if we map it from up here, these two are relatively the same. So we'll just put it in the middle. This other one, right? The swing high to swing low, we can see how price respected the 2. Right? And the 2 is what? The 2 is your SMR, or the 2 is your retracement, right? So if we look at the 5 minute, we could have gotten in where? We could have gotten in on the retest of the change in state. And even though we would have dropped and came back up, we were protected here, and we were also protected here. And then when, like I showed you with the internal external, right? This was your external, and then we created this external, and then we created this external. And look how we broke away from it. So this here now, this one is your highest external that you want to break. Broke it here. This other one is your next highest external, and then this bad boy up here is your next highest internal. After we break all of these lows, and then we start, right? This is where we started breaking highs. Then we start attacking those internal highs. This was your external liquidity, which was what? New York and London. And what do? Broke the high, identify the change in state, and now we just wait. You guys getting kicked out? So now we just wait. So the price projection, right, is going to give you, you're going to get multiple price projections based off of where you draw your change in state. But as you can see in those two examples I gave you, it was all in the same general area. And yes, we want to be as precise as possible, but they were all in the same spot. They were all in the same general areas. Just some of them were a little bit higher than others, which gave you a different price projection. But they were all still respected because you have this area is your SMR zone, right? This is your SMR for the 4. It's still a range of where you can reverse. And that's what we're looking to catch, the reversal. So the other one I was going to show you guys, right, was, I think we're on the 1 minute. Into here. Okay, so those two, I forgot where it was. So those two examples were when we sweep the external range of Asia. What about when we don't? Right? I'm glad that we came to here. What about when we don't sweep the external? We did sweep it here, but we only dropped into EQ of Asia, and then we broke higher, right? This, if we would have identified, oops, our change in state inside of here, right? Here's our change of state. Here's Asia high, right? Here's Asia high. See if it's still sharing the screen. Okay, here's Asia high. So then we look for what? We look for when we break, right? Here's your high that we broke. Here's your high that we broke. Your high that we broke. Here's your high that we failed to break. And as we kept dropping, this is the area here where it created the next lower high, right? Your market structure shift. This is where it created the next lower high. So we failed to break this high. So now what do? We use the body to go over the candle, right? We can see where we have SMR. Oops. We can see where we have SMR. Now, Asia was still a big range. Let's go back to here. Asia, we never broke that Asia range, right? Because Asia expanded really well after this big drop, right? Asia came from down here all the way up here. But if we look, what do? The one thing remains the same. Asia. Asia is your deciding factor on if you're going to change the state of delivery and you're going to go the opposite way or you're even going to continue. So this would have been a perfectly fine, good trade all the way to 4. And then what do we expect to happen at 4, right? We expect the change in state of delivery again because it's the SMR zone. This is where it gets a little bit trickier. You guys keep logging out. You guys good? This is where it gets a little bit trickier because we are having a reversal and we're not breaking any old lows, right? London low is this, Asia low is this. So we're technically not breaking any lows. So according to our trading plan, we should not even look for a change in the state of delivery here. But we can combat that. Remember the video that I made about time and price, right? We'll go here, right? Remember the one I made about time and price. There's specific areas where you want to look for SMR. There's specific areas where you want to find the change in state of delivery. One of them is where? Around equities open. What is happening here? 817. Oh, actually, I'm on New York now, huh? 817 is news, right? There's normally some type of news that happens at 8:30, right? And then 9 o'clock here, 9:30 is your equities open. So we look for the time and price, right? The time and standard deviation, the change in state of delivery around 8 o'clock to 9:30 is we want to find another change in state of delivery. This falls within our time zone trading. Where's my stupid ray? So this one? Oh, here it is. Right here is 8 o'clock in the morning. Right, 8 New York to 9:30, which is where equities open. This is where we want to find our next change in state. And where did it happen? Here. Here's our next change in state. Let's add, right? This is probably going to trip you guys out. Let's add quarterly theory, and let's see where this falls in the quarterly theory, right? Red for manipulation. I think that's how quarterly theory works. I think it's the red is the manipulation. Yeah, accumulation, manipulation, distribution. No, that's, I think my quarterly theory indicator is weird. I'll do a different one. When I was recording, you can still see it. So in the recording, you'll be able to peep it. Yeah, it's recording on the YouTube thing. So in within, I was looking at where quarterly theory hit, but my indicator wasn't popping up correctly. So we'll just take quarterly theory out of it. But if you look, right, we identified this SMR, right? Not the SMR, sorry. We identified this change in state of delivery outside of the Asia range. And then when we broke back into the Asia range, we are now within a time and price window, right? 8 a.m. to 9:30 on where we'll have our next change in state, which is exactly what happened here. And then we map out, this is not where my change in state is. I'm just showing you where we map out our next change in state, right? And then we catch the next move. Or we map it out, even smaller. This is our change in state, right? Where we could have taken it. Equities open. So when you're outside of the range of Asia, that's where you will get a good change in the state of delivery. Trading intraday, right? Here's Asia, and we break out, and then we start dropping. These little changes of delivery are harder to identify, but they will get easier once you start identifying them in Asia, because you will start identifying the change of the algo going from creating an external. Remember, because as we keep creating lows and breaking lows, and highs and not breaking the highs, the highest point, your highest point becomes external. So what I like to do is I like to make my external 2 or 3 away. So if we're dropping, right, we come up and create this high, and then we drop, and then we create this low, this high, this low, this high, this low, this high, right? As we fail to break this high, this becomes my external, right? And then when we finally fail to break the low and we start going back up, this one is now my external. But it's my external after we break 2 highs. Because now all of our lows that we are trying to break are now our internal liquidity. This is all of our internal shit here. Because where's the market going? The market is trying to attack that highest external range. That's why a lot of times we move from high a day to low a day. Today is a perfect example, right? Let's remove the drawings and the indicators. Actually, I got to put the indicator back on so we can see New York. If we add our indicators, right? When New York hit, this is New York right here. This is still New York. Still London, but it's still New York, right? When we created the low, right, we moved from where? We moved from creating the highest point, which is this. And if we look back, what's higher than this? This one is higher. So these are all of our internal liquidity, and then this one is our external. And as you go left, more to the left, then all of these become your externals, right? These become your external highs. So your external high is wherever you, not me, wherever you decide you think the highest point of the market is going to go. I think today's cap is going to be 17, what is this? 17,702. That's today's high. This is going to be my external range today. This is my external range. If you go left more, you can see that there is a session. I would switch it to the session because that's where liquidity is resting. That's where you have liquidity up here. You have resting money over here, right? So as we fail to break these highs, right, when we finally do change, then we attack those internals. But it always happens the same, guys. It always happens after Asia completes its cycle. Any questions? I know there's only a couple of us in here, but any questions, guys? If you want to get in off of the change in state of delivery before read the retest, right? Because the retest is just going to identify that, is just going to help you identify that. It's going to help you to understand that you are identifying correctly the position of the change in state of delivery. When we break a high, right? When we create a high, this is technically our change in state. Until what? Until this is broken. So this would be where I use my version, right? Where you go from your high to your next candle, and then you find your SMR. Oops. And then you find your SMR at the 4 or at the, excuse my writing, or at the 2.5, right? If we look here, when we broke Asia, we did create a change in state of delivery, but we created the retracement change in state. So this one, right, mapped out correctly, is going to give you where you change, right? And then as we manipulate here, we do what? We grab, right, because this is our lowest point. We grab it and we do the same thing. We go from candle color to candle color. Our manipulation is blue, so we go to the close of what? We go to the close of our black candle. And if we map it out further, we can see here, this is where our next SMR is going to be. It's going to be outside of the 4. And if we look to our left, where are we outside of? We are outside of Asia, right? So we caught the poke your head out of Asia. We caught it, and it would have taken us to 4, which is our SMR, where we would have identified after the market shifted, right? This one would have been a little harder to get into, but we identified the market's going to shift at the 4, and then we bring it back up, where we then what? Where we then identify where or what are we trying to take out, right? This is the high point, but this is just, I'm just going to do this to give you an example. Oops, wrong way. Right, this is where we go back in time to see what it is that we are now sweeping. We're sweeping all this liquidity, right? Which is all these equal highs up here. And I didn't know those equal highs were there beforehand, right? But I am showing you guys that all I did was map out to the left, and then it helped me identify what? That we took an old high. That's why it's important to have your PD arrays up and your key levels, right? And then we identify that we took that high, and we took that high where? At SMR. At SMR, we took the previous 3 highs that were up there. So now we go back to mapping it out. And this is the part that's really going to fuck you guys up. Then you can get in anywhere underneath the 0, as long as you have drawdown, right? Anywhere underneath the 0, and you can take it to where I always tell you guys, 2 is your TP. Take profit at 2. The reason why is because if you get in early, let's say you catch the perfect move and it decides to go 2 and come back up to tap to drop down, your change in state does not always work out perfectly. Sometimes we go 1 handle, 1 tick below the high that was created before we dump, right? That's what you guys call a double top, right? We create the high, we create the change in state, we bypass the 0.5, we bypass the 0, but we never do what? We never break the long-term high, and then we drop. So if you get out at the 2, you are very likely to grab some of that profit, if not a shitload. Like this is a lot of handles, right? This is from top to bottom 84, right? 84 handles. And if we retrace and give it all back, remember, if you're on an eval, if you're on a PA, you're fine, right? But if you're on an eval and you go 5K, if you're on a, let's say a 25K, and for some reason you don't take profit, but you make $1,600 on that eval, from this entry down to here is $1,600, right? And we go back up and we go $100 into negative, you have now lost $1,700 because you got the 16 plus the 100, and then you get liquidated. So that's why it's important that we take profit at the 2. Now it's different if you have a professional account, right? If you have a PA, the reason why it's different is because your threshold is here. This is, we're gonna say 50,100, right, on a 50K account. This is where 50,100 is. And as we drop, right, and let's say we make, this is just an example, we're at 50,200, and we drop and we make 1,600, and then we lose 1,600, right? We're still at break even because it's a PA. We're still at break even. We didn't make any and we didn't lose any. But as we are in the 50,200, right? Sorry, yeah, 50,200, and we drop and we make that 1,600, and we get out at the 2, we are now 1,600 in profit, and then we do what? We wait for the retest to where we can do what? Get in again here and take it to where? Take it to the 4, which is double, right? Because your price projections is even 1, 2, 3, 4. It's going to be double that, which is going to be 3,200. So you will make 1,600 on your first play and then 32 on your second play. And for me, it's more important for me to get in on the retest where I have a comfortable 3,200 because we already tapped the 2 and we respected our change in state to where we dropped down to the 4, and we SMR under the 4, and then we identify the next change of state, and then we go on to make what? To do the same thing. We take it to the 2, we get out at the 2, we make 1,600, right? Here's the 2 here. It drops down, respects our change in state where we get in again, and we take it and we attempt to take it to the 4 while, like I said before, moving our stop loss into profit. So if we do get taken out, it triggers our stop loss, but we made 16, and we also made from the re-entry point to here, we also made an extra $1,000. Again, this is just based off of random numbers, but that retest is going to be crucial because it's going to allow you to get into a safe trade. And when I say safe trade, I mean a trade with a protected stop where you don't have to worry. You're going to worry anyways, where you don't have to worry about your stop getting taken out. If you guys don't have any more questions, I will stop the stream because I know a lot of these videos run. These videos run a lot, really long.